Well, hello, everybody. Welcome back to Markets and Sectors. My name is Mike Fairborn. Hey, and I wanted to say happy Friday to all of you. It's been a long week. We've seen a lot of volatility in the markets, up and down to a degree. Great to be here, folks. I wanted to take a look, too, at maybe some of the stronger sectors that might be poised for 2026 and talk about specific details behind it, both fundamental, technical, and even what we've been seeing in terms of buying pressure. Which of those are standing out relative to the others that are not standing out starting the year? So look forward to diving into that with you. I'm joined in the chat by a good friend and colleague of mine, Mr. Brent Moores. I've known Brent for at least 20 years now, as we've been discussing the markets and visiting Chicago, among other things. Brent and I went several times there. It's always great to have Brent here back on board with this. Very knowledgeable. Encourage you to take a look at his websites, folks. It's great to have each of you here with us today as well. Jay Rich. We've got others in here. Sand. We've got Helen, Kelly, Will. How's it going, Will? As well as others. We got Zach, Mighty Mouse. And her name was Lola in the house. All right. Well, hey, folks, any questions you have, throw those in the chat box. I'll try to address those as well, but we like comments as well. You might not have questions, but if you have comments, throw those in so we can take a look at those and go from there. All right, folks. So let's set some disclosures so we can get the show going here. Paper Money software application is for educational purposes only. Information here is for general information purposes only and should not be considered an individualized recommendation. Now, investing does involve risk, including for some products more than your initial investment. There's a look at our futures disclosures. We do reference those from time to time. Remember, with futures, they do, we get all kinds of interesting futures and commodities symbols to take a look at in different futures contracts. But we just look at the charts here. We also get volume with those too. But futures and futures options trading involves substantial risk. It's not suitable for all investors. And finally, past performance is no guarantee of future results. All right. Well, let's dive on into some things here today. I wanted to highlight a couple of different details as we look at our markets here. In fact, I'm going to start off with the S&P 500 index real quickly here and just see how we're doing on the index itself. In fact, we're moving up towards a high end of the range right there, as you guys can see. And what have we been doing? You know what we've been doing lately? Just broadly speaking, big picture. I know you guys can see this, but hey, I want to point it out anyways, because it is fascinating when you get it. And it is kind of part of an ascending triangle pattern. And those patterns can be very, very interesting. I mean, okay, I'm going to do this. That's going to be way too difficult to draw freehand. So let me just go and use Thinkorswim tools. In fact, bottom right-hand corner of the screen, I'm going to go ahead and just use my little drawing tool. I'm going to zoom in first, though. All right, so let's just do the diagonal line. And I'm going to kind of highlight this. I mean, if I draw from over here, you can really see an ascension. You can also see it over here, too. The one thing you do get with an ascending triangle, folks, and it is clear as day. Of course, you got to map it out sometimes. If you see it enough times, it does become a little bit more clear. And that's just this. Nothing too crazy, but you are getting higher lows over here, too, as you're kind of consolidating into a range. You're getting into what's referred to as the apex of the triangle. That is where those two lines, the bottom trend line ascending higher, and the upper trend line also ascending higher, but at a slower rate, they meet together. They converge at the apex, and normally you break out before that period of time. I mean, it's tough to drive it all the way to the end, although I have seen that before, and I've seen it break out right at the apex at that point. One of the things is we're taking out just barely the tops right now. Now, the market is not closed yet. In fact, we have a little bit more time left. We've got about a little under an hour, but we are taking out highs, and this line currently, folks, all else equal from a market perspective, that I must say, a lot of traders that are using technical analysis would consider that to be a positive. It's a breakout in the direction of the trend. Those are positive indications, right? I mean, as we look at it here, all right, so there you have it. There's the apex. By the way, there are some comments in the chat, and I'm going to get to the, I'll read those for sure. Appreciate you making your notes, even about prior classes. So that's just good follow-up. Thank you for that. All right, but there you go. So we're seeing some strength in that regard. A quick note here, because we will look at this a little bit later, but how is it when we just kind of socialize everything and we say, hey, we're not going to look at performers or underperformers. We're going to say everybody's equal here. It's the socialized index, right? And that is the equal weight, SPX EW. That's all it is. I'll throw that in the chat. It is an index, but you may have seen it. If you come to this class, you see it every week. But I am seeing some new names, so I thought I'd throw it out there to you. What are we seeing there, folks? We've already taken out those highs, and this is all about market breadth. Now, what we want to do today is we want to find out what sectors are really standouts, perhaps, for 2026. What are some of the signs we're seeing and indications out there so that we can try to spot that growth early? Because sometimes if you can see it now and they're starting to break out, they might continue literally from 1 month to the next month to the next. And that's how oftentimes it can go. But to do that, you have to have technical drivers, maybe some volume drivers, and to top it all off, fundamental drivers. To get a whole sector to go higher, folks, a lot of times it is really tied into fundamentals, and that can be growth and value, but I've got some good ways for us to look at that big picture as we dive into this, okay? I've got some individual stocks, too, that I want to look at for sure. Maybe some of those that might be setting up that might have had some volume indications to them as well. So we definitely are going to hit those, but just had to move through a few of these big picture items first before we get going. And when I say big picture, yes, that does always mean, when you guys hear me say big picture, we start right over here at the market posture, because that is big picture. Now, we do start off with the little big picture first. So it's not all big picture, but it's the daily chart. We're looking at the dailies, and we're looking at the 50-period moving average, the 100 and the 200. We just do a multiple here, times 2, just to see long-term, intermediate, and sort of intermediate and short. And that is our 50 right there. We've been bouncing off that 50. And what was interesting, I sent actually a little tweet out about this just a little while ago. Well, earlier this week, I should say. That's not a little while ago if you look at it that way. It was 5 days ago. But if you take a simple moving average here, what was fascinating is we even had what I think a lot of traders focus in on is the short term. Let's really go ahead and just weight this guy big so you can see it. There we go. Five should do the trick. In fact, we'll put a little style into it. There we go. We actually dipped right off this level here, the 20 period, on a higher high, on the bottom of a trend line. And sometimes what happens is when you come back down and you hit those moving averages that have been instrumental in a lot of cases, you can see over here, I'll highlight them, for strength of the bounce. We dipped below here about a day or two before we bounced back up above. But those are interesting signs. Interesting as well, if we take a look at the ES, just taking a look at the index itself, we did that and we bounced off that 20, folks, without any, well, okay, not any. We had volume there, but you had what they estimate is up to half the market participants, at least on the floor of the exchange, are not present during the last couple weeks of the year, right? They take the last 2 weeks of the year off. I'm going to try to highlight that couple of weeks right there. Look at that. We still managed to bounce and hold that 20, which is noted for a stronger term upward trend with very, very low volume. All else equal, that was a positive too for those traders that look at light volume pullbacks and holding longer or shorter term moving averages in a bullish type fashion. So I've just got to put another plus out there, because I think a lot of technicians will look at that and say, that's in with the trend. That's why I'm putting the plus in there. That's all I'm indicating is it's showing trend strength. It's giving us indications of that. Okay. Now, I've already gone past our market posture. I've thrown that on, but let's go one more out, because you can see we're clearly above those levels. Now let's move to the weekly. All right. Now this is a little bit more interesting in the sense that we're holding above the 10. It's a short term. It's a 10 week and a 40 week. These are weekly bars. Crossover occurred down here. We've talked about how crossovers in these two interesting weekly moving averages can spell out longer term bullish trends. Nothing's 100%, but there you go. And look how well we've just kind of held that line. We've dipped below it closed below it literally once over all those weeks, actually, starting back in about April. So talk about a long-term trend bias to the upside, and we're still holding above it. What is interesting, we've been going flat for a little bit on the markets. Last point here I'll make, and then we're done. Oh, sorry, right here. Last point I'll make is that on the markets themselves, that is the ES, and that was fine. It's the same, a similar visual. It's not exactly the same. Folks, we've been going flat in the markets since, yes, before Halloween of 25. Yeah, we are back to right here. That is the first part of October. Well, sorry, the last part of October before Halloween. That was ultimately flat. That actually forms the top of that ascending triangle. A lot of it is right there. We just barely got above it now and extending above the range this whole time. So we have been kind of building up into a range, and maybe after a long-term move, prices might be ready to start back up again. That's what a lot of long-term traders love to see. They like a consolidation after a big move to the upside. In fact, if I just do this, I'll just kill this chart entirely. So we get our own blank screen in here. But if we have a long move to the upside, traders do like a consolidation, but we got something even better. We got something even better than that. Much, much better. So it's kind of like, if you look at, it's like a long-term sort of a bull flat pattern, like on a weekly basis. We are now, if this is true, becoming the case, we're kind of already starting to take out those highs. So it is looking a little bit interesting in that regard. Okay. Now we're still dealing with markets. I'll put this guy back on again. Oh, not that. There's our chart. That's, by the way, it's a great way to throw out a blackboard if you ever wanted one. It's just right there at your fingertips. All right. I threw this out. I think you guys have seen this before. I threw it out as just an X post because it is somewhat interesting to some of you out there, and that is this. That is the seasonality. Just looking at monthly price tendencies for 5 years is kind of interesting. We get to see it. What are we seeing over here? Now, you can't see it, but that's supposed to say January right there. That's supposed to say, well, that does say February. Very small print, but on average, key point, average seasonal trends, we have a pretty good run up to about mid-February right there, on average the last 5 years. Now, folks, if I dive in over here, because we're still looking at the markets, and I'll just throw this out to you if you want to take a look at it. Be sure to follow Brent on X. That is Brent Moores CS. And let's see, I gotta kill this 1 second. Okay. Oh, alrighty. I don't know where my box is. 1 second, everybody. For some reason, that pulled down. There we go. Okay, it's on there. You can see it. You can also find it here too. Under, I'll go back over here and I'll throw out SPX, okay? Under style, standard, seasonality right there. There it is. The only thing I've done different is I've clicked on the wheel. I've gone over to my price axis so we can see the last 5 years better relative to where we're at right now. And you can see it. Now, here's the thing. If we look at March historically, if we knock out COVID and tariffs over the last 5 years, which is what we're looking at here, March would go like this. Normally mid-March. And then you get the consolidation and you go up. But March has historically been a strong month. We don't know if we'll get COVID. Well, I hope we don't. We don't know if we'll get more tariff situation or what else we might see in March. But it's been crazy because March and February had really been quite strong in terms of a rally. In fact, it was historically like one of the strongest behind November. So traders will look at the first part of the year, many of them, if they're not expecting a major crazy event to occur, which both of those kind of were, in terms of something you just don't see very often, okay? But maybe mid-March or so. Oftentimes it can run. Now, question mark, we'll have to just watch the trend, etc., and just see how it unfolds. That's going to be the real key point. All right, so I dived right into markets heavily. There was a lot to look at there, a lot going on, and I want to just see how we're positioned. Now, let's dive into sectors so we can take a look at what might be some of the strongest sectors. Before we even do that, though, we are going to hit sectors right over here. We got to leave time for some stocks, but here is what I created. Oh, I've got it already over here for us. So let's just do this. I'll throw this guy up here, and this is the 5-minute. This is the weekly sector potential rotation, and it is relative strength of sectors relative to the S&P 500 right there. Okay, so all else equal, we looked in markets, S&P 500 fairly bullish right now. We're going to see something similar. I'll look at NASDAQ here in just a bit. We've got some NASDAQ stocks to take a look at, but they were fairly strong. As you can see, I mean, we've been in a sideways channel, breaking higher. Now, looking at the individual sectors, the 11 different sectors out there. What have we seen over this past week? Well, materials has been quite strong. Financials started off okay, and then financials dipped. Discretionary, folks, pretty much throughout the whole week, we've seen relative strength performance, and that's relative to the S&P 500 whole basket of 500 stocks. So these have been the outperformers. That's what we're looking at here. These are not the charts of S&P 500 sectors. This is the relative performance of those same companies. They are a little bit different. Healthcare, well, it dipped back down a little bit. Everything in general, if you look at it, but we did have a spike up. Right now, it's a higher low on the market. Financials is actually making a slightly lower low. So let me clear this off. Let me just highlight. So energy, materials, discretionary, and technology. Now, healthcare, higher low. And by the way, with technology, some of the communication services, and actually some of the sectors as well. Thursday had a good day, but generally speaking, Monday wasn't that great. We kind of came down. We're kind of like similar highs over here. But we want to kind of keep an eye on this, and we want to have some ways to examine this a little bit more clearly, a little bit more focused in terms of, what are the financials doing? What are the fundamentals doing? The financial fundamentals, the charts themselves within these companies, and actually volume. And I've got some concepts for us to look at here as we look at that too. We can always go back and look at the longer term. In fact, what I'll do, I'll share this updated one with you guys just so you have it right now. I can do it over here. This kind of wants me to, it looks like. All right. So let's go back over here and I will pull that up. I've got all my sharing available over here for some reason. This is updated, but I'm just going to share that grid. These are just charts, but any ThinkScript is not guaranteed for timeliness or accuracy. This is not technically a ThinkScript, but I just wanted to highlight that. So this is the weekly sectors. I will have that down below, this link at the bottom as well. Okay, weekly sectors grid. Click on more. It's under the description section or YouTube. If you're watching this on the recording, that link will be down there. It's just updated so you can see it if you don't have it. I've updated the labels. Now, coming over here, let's go ahead and take a look at our sector grid 6 month. There's going to be some extra. That's just, okay, so these are the actual charts. This is very good to take a look at as well because you want to see how the charts are doing. We saw the first one relative to the markets, but this is very, very important because we looked over here and we saw, okay, industrials quite strong. Discretionary, look at that. Breaking above potentially a high range that we've been in for quite some time. Okay, healthcare. Notice it was down for the past couple of days on that week. That's a very good trend to the upside. Communication services, infotech, sort of a, look at this. It's a triangle pattern. What did we see in the S&P 500? Kind of like that. This is an interesting consolidation because this was a very big run up. So if we start to break up higher here, maybe something traders might want to, keep an eye on. Okay, discretionary and those communication services, very, very similar, kind of like a flaggish type pattern as well. So these are really helpful to keep an eye on too. If you don't, these are just the actual charts of the same companies. The other one was relative performance on a week-to-week basis. I have the longer term one I've saved, and I'll put that down in the description section as well. But just while we're on this one, these are the actual charts. Sector grid charts. Okay. That's in the box as well. Staples trending up. That's right, Eric. Yep, I saw that too. So that's an interesting thing to keep an eye on. Big moves right here in the staples. So that is interesting, especially if it can take out some highs, because it's really kind of been languishing down in sort of a measured move type setup, though. Similar highs. Let's zoom into it right now. Maximize that sell, and you can see much easier. So prior highs, kind of in this range over here. Since you're so close to it, if it were to break out, let's say on a Monday, and we can look at any, sector like this same thing, because we saw this in communication services, we saw it in technology with the triangle. But when you get so close to this range, sometimes traders might say, well, I'm that close to resistance. Why don't I just wait to see if prices can actually break resistance? Because many breakouts don't just break out and go like this. Many of them will break out and then they'll rest on these as higher levels, like higher highs. But a breakout here, breaking higher, a break could be interesting if it were to take out longer term resistance. So some real interesting clues you can get from the sector analysis as we focus in on it, okay? So that is quite interesting there. Now, a quick review of this before I dive into the stocks, because I want to go through our market sector review real quick. And I wanted to highlight this with everybody. The advanced decline line for the NYSE, 2,700 plus stocks, new high. Oftentimes that can tend to lead, we got a new high over here too, that can lead to the S&P, which is a smaller basket, still a big basket of stocks, 500, definitely bigger relative to the Dow or the NASDAQ 100. But when you get the breadth in there, that's what can help give sort of like some structure to the trend so that it can continue to rise higher. Remember we talked last week too about the McClellan oscillator? The McClellan is really interesting the way it's used. If you go below the minus 100, we got dang close. We didn't quite get there. We touched it, basically. That is minus 100. If you get back above the minus 70, Tom McClellan will say at least 2 to 3 weeks of a rally. Are we starting to see some of that? Well, like we said last week, it was positioning very, very interesting there. There's maybe your first week. Will we get more in here? That remains to be seen. We can say, too, the summation index looking quite strong to the upside, right? Look at the SPXEW breaking a high here. So the basket of S&P companies, visualize S&P 500 companies. If we were to look at this and they were all the same size block, not market weighted, then that's exactly what you're getting over here. Great reference point to have. Okay. There we go. S&P on a weekly basis, absolutely no Hindenburg-Omen spikes whatsoever, not showing a fracturing between 52-week new highs and lows in the market. So, you rarely get that at highs because you're getting highs and it's lifting even some of the weaker performers there as well. So a little bit more strength in the composite line. The NYSE is really going up. And, well, generally speaking, you're getting more highs, but this is kind of more of a breadth move as opposed to a small number of companies that are making new highs. So still fine there. Okay, we'd looked at seasonality already. Folks, want to just use this here. That's a 10-year seasonality chart. You can see how the markets will oftentimes run 10 years, 5 years, 10 years. Here's a 20-year, all very similar. The tariff decline was so big, it knocked out literally 20 years on average of strong marches marches and well, for like it because it adds even to like the 50 years. It was just such a big decline, it's affected that. But generally speaking, like we said, historically, it may run up through mid March. Doesn't have to be. It's made up of good performers or underperformers and overperformers, things like that. All right. So let's do this. One more note on sectors, and then we're going to go into the last portion. What we'll do is we'll go into stocks specifically right now. Okay. So we know that we have a basket of sectors over here. In fact, let's just pull those up right now. I'm going to go back to my quotes. And let's look at those right now on a 1 month, 3 month, 6 month, and 1 year basis. I'm going to go down to my public folder. I'm just going to go into the S&P 500 sector indices, and there they are right there. Okay, so you've got that. Looks like there was an alert on Coke going higher, maybe breaking above a range I probably set in one of my classes on that on a paper trade. But just taking a look at where we're at right now. Now, why this is interesting is because what do we have reference to? We have reference to the weekly sector moves. We have reference to the daily, or excuse me, the 6 month sector charts that I sent out. So now you have the charts, and now let's look at relative performance as we go through here. Here's our 1 month relative performance. I'm going to click on it again. You guys will see this here, but this is at material sector for the last month, 12%. Now, could this continue? Let's just see for the year, not nearly as strong, which is really, really interesting for a full year. So in other words, we had a decline, but then we had a breakout and we begun to go a little bit higher. That is fascinating. There have been some materials that just underperformed. Some of the industries, keep in mind within the sectors, gold and silver miners, they've been like, many of them have been like up, and even, very strong trends. But collectively, they're, it's strong the last month. And you know what's been going on there? Some of the other industries within the sector, the laggards, are now starting to kick in gear. So that's kind of an interesting place to look at. Maybe, you've got, let's say, for example, you've got some of the gold and silver miners, and they've already done this, over a long period of time through last year. But now there are other groups in there that were like this. It kind of just run up and gone sideways, and some of them are starting to break out now too. So, that's what's lifting some of those materials up right now. I mean, the 1 month, that's, just wanted to highlight, it is the one that has been performing the best. But as we go through here and look at these can be, quite interesting to look at. And I'm going to highlight this right now. I'm not quite done with it, you guys, but I've been working on an approach that we can utilize each and every week going forward. And what it is I'm going to take a look at the sector ETF top holders, the top 10 of each of these. The index might be very similar. I might look at the ETF. I might look at the sector holders, not to name any specifically, but I'm going to look at the top 10. I'm going to create a basket of the top 10. And with that basket, what I'm going to do is I'm going to look and see what they're doing collectively, the top 10. And I want to look at certain trends. And one of those trends is going to be fundamental trends. And one of those trends is going to be volume type trends. And I wanted to tell you which ones of these right now from just a preliminary look, because I want to get that information up so I can share it, but I don't have it right now completely. But I can tell you this, in terms of the money flow, okay, the money flow indicator that we talked about, a good one to look at over here, just futures, you can get a sense of the general broad market. The ES, look at the money flow on the ES. The money flow on the ES, we actually began to break higher. Yeah, right there. First part of December, it said we're getting more collective buyers than we are sellers, which tells us, according to the money flow, that we are going to take out this range. And what did it do? It didn't stop there. It kept on going and going and going higher. For people that look at money flow, that is a positive. Okay, that is it's a collection of buyers relative to sellers using volume. If we closed up on the day, it adds the volume to the money flow. If we close down on the day, it subtracts it. You don't get this very often on a sideways consolidate. It just doesn't happen a ton, but it is a sign of an early warning type of a breakout. And we got that. It's a funny signal, isn't it? What other indicators were saying, price indicators were saying right here, you were going to take out this high. But based on the buying, the accumulation behind the scenes, that's what we were getting. Now, if I look at healthcare, technology, energy, discretionary, right over here, let's pull it up. Now, because we've got the charts to do so. There they are, and I'll link it up. Notice over here, we can pull up some of the volume. Sometimes the top 10 can be very, very helpful, but the beauty of these is we get the volume coming in. Look at energy recently. Folks, energy is not that great in terms of the chart trend. We've been flat for a long time, but it's already breaking above ranges here, and that's a positive. It's breaking above these highs, right? What else do we have? I've got three. Energy, healthcare. Look at the strength of healthcare. Really, really good strength in terms of that money flow. It's just strong. So what this is telling us, it takes a lot to move these companies, these sector indices. And a lot of times they say it's institutional buyers that are behind it. Because imagine buying enough of the companies that are within here collectively and being able to move volume. Wow. Generally it is. You'd have to have a whole lot of retail buyers all at once just buying. And of course, institutions outweigh retailers dramatically, like us, it's just, they're so much bigger. But it's a way for us to kind of spot that. Okay. I'm going to show you the other ones that are moving. Industrials is just kind of steady with the trend. As you can see, we were sideways here, but look at it. It's still trending on up. These are the positive ones. So energy, we've got technology and discretionary I want to show you as well. Look at discretionary. Here's a sideways range. We're way above it over here. This was the high. Where did this come in at? It's all the way down here. The buying, relative buying, folks, it said your real clear breakout was right there. Again, first part of December, it says you should take out this high according to money flow. You've got more buyers that are coming in now into this than there were even over here, according to the way that money flow tracks that. So you've got more buying activity. So what can that do? Well, it can make prices more sensitive to upward moves. And I got to show you technology, because technology has started to kick in gear. Staples is not yet there. So we have seen a big price move, and we looked at this earlier for a potential resistance level, but look at that, we're still making lows. So prices are jumping, but it could be, according to money flow, it's a sign of a possible fake out, not a breakout. So be watching this. If more volume comes in, boom, it can flip that fast. And you would see that over here collectively, okay? Healthcare was the other one I was going to mention. It's still flat, but watch this for a possibility of a breakout here, because we're in a sideways range, but nothing really moving there. Financials have been up, and there's technology. Look at technology. We are in a sideways to downward move. What direction is this? That's not sideways or downward to me. That is up. That is up. Okay. And if people that are looking at money flow, traders are looking at it, they're saying through here, institutions have been perhaps accumulation of shares over here. So that brings us to our next point. And that's this. We're going to go over here. We got to look at our third kind of a tier. We looked at the charts. We looked at volume now. Sorry, folks, I had to jump kind of quick. But we got to go into the fundamentals here. And what I wanted to highlight, I'm going to show you how we do this. Yeah, I'm just in my demo account here. I'm going to go into research and research tools, just on schwab.com. Great resource here. Just great stuff. I'm under the stock screener. And what I'll do is I'll just click on this, you guys. So this is such a great way to get some of the key tools. I've just put that in the chat just so you know where I'm at. If you want to go there, it'll Of course, you have to log in, but go over here to basic first. We're going to keep the theme the same. I'm going to go now into an index. What were we just looking at? 500. There it is. We could just click right there. S&P 500, 503. There you go. The S&P 503. Currently, there's 503 companies in there. Now, next, I want to go to sectors and industries. I'm not going to touch anything else. I'm just going to highlight this. Select all of them. I just want to have that column in there so we can track this and we can see what numbers are coming up. Now, what I want to show you guys is kind of a quick way that fundamentalists will look at value versus growth. It's called growth at, it's an acronym, a reasonable price. And I remember Brent doing a room on this one time as well. Good stuff he had there. Growth at a reasonable price. You know, there is a formula, I should say, out there that can be used. It's the PEG ratio. And we have excellent access to that right off Schwab, the Schwab Stock Screener PEG ratio. And what it simply is the PE ratio divided by the projected growth. Projected growth, okay? That's projected. And the way that Schwab does it, they're looking at it over a shorter term time frame, okay? They're looking at it over the next 1 year, which happens to be the most accurate way to do it because it's very difficult for even the CEOs, CFOs to project out 5 years, especially on information technology companies, but it's a projection out to 1 year. So basically you're looking at the PE ratio over the, I got to put a P in there, folks, because it is projected. It's an expected growth rate. Now, if that PEG ratio, losing some room over there, aren't I? Let me just clear this guy off. If the PEG ratio is less than 1, that tells us that the PE ratio itself, PE ratio is less than the growth rate, that projected growth rate. We got to put it in there again because it is an estimate going forward, projected growth rate, right? It's less than, and this could be equal to or higher than or equal or just flat or equal. But if that's the case, you get less than 1. Do you guys see the value in that equation or that ratio, I should say? You see it? Wait a second. You mean to tell me what I'm paying for current earnings right now, how it's valued in the market, is less than the projected growth rate going forward? Yeah, that's what that means. It's less than 1. You don't get a ton of them out there, but it's probably one of the quickest ways to get a growth at a reasonable price or a GARP type indication. You can find it right here under valuation. That's the next box we want to have. Let's scroll down here. And all I'm looking for are some hits. I just want to see what shows up. Out of the 503, I'm going to go -1. I could even go 1 to 2, but I'm going to go, oh, okay. Well, I can go, let me do this. 1 to 2, there's 113 though. That's a lot. Out of there. Let's just look at this. Just the -1 for now. View those. Why would the institutions be buying? What were some of those areas we looked at? Just looking for some hits. Discretionary, energy, financials was in there. Healthcare was in there. I didn't even get to the bottom. I got to get out of the, okay, let me scroll down. There it is. Information technology. And what specifically? Semiconductors. You can look at some of these. Look at this. This is very, these are all less than 1 on the PEG ratio. It will give us the industry too. I found that interesting that there are 3 in there because the growth rates are so high relative to the prices people are paying. If I were to include a 1 to 2 PEG, we're going to see a lot more semiconductors and industry. Okay, so that PEG ratio, don't mean to throw so much at you, but I wanted to hit the 3 key, components that we're talking about today. All right. If I choose this only, 78, we're going to get even more in there. And there's some big hits right around the semiconductor and semiconductor equipment. Companies like this might have combinations of growth and value components associated with it, but technology too. There are others in there to keep an eye on. But you guys might be watching this semiconductor company coming out of a longer term range. This was one that has kind of like a, well, let's just look at it. It's sort of like a weekly cup and handle, rounded bottom, and right there, it's resting kind of on a weekly cup and handle. This is a weekly chart right there. So some traders are looking at this as maybe, hey, could there be a measured move to the upside? Sure. Let's look at the volume. Oh, okay. So it's also extending higher. These can be utilized here too, right? But today we're really looking at the stronger sectors. Now you can do this too. Let's take a look at like Salesforce, for example. Salesforce is another one. We had a just a paper money trade in. I was a swing trade class a little bit ago, and you can see the flag extension over here. Look at the money flow on this. Okay, did we take out the highs? We took out that high clearly, and we're not even. That's our target range, right around 300. I'm just saying there are other tech companies in that group too that could follow along with the index. We don't know, but money flow is something that traders will look at, and we're well above those levels. Look at this. Look, prices are actually down. They're down here, and money flow, even from that level, has done what? Wow. I mean, we're way up here. So what does that suggest? According to money flow, institutions might be accumulating shares, not distributing them. But I want to state this, because when you get into a sideways range like this, sometimes with a coiling motion, which you'll get when prices get really kind of tight like this. Come over here, take a look at these highs. Like, see this right there? That's a clear high. I would also say that that's a clear level of recent lows or support. Now, some traders would say, Mike, that might be an exit range over here, potential exit range. And this might be the buy range in here as it breaks out. Also, another potential range that we're using this just as an example, okay? This is just an example stock, which is what we talk about here. But sometimes if it bounces off support too, sometimes they'll say that could be, with whatever company you're looking at. Sometimes they say if it's bouncing off support or breaking through resistance, those could be also considered breakout points. But it is, nothing's 100% in the market and anything can happen. But what they refer to this as is a smart money indicator. Something might be going on behind the scenes. If I look over here, look at this. There's a little cup and handle there. Just a little baby one, okay? What type of indicator is money flow? Money flow, yeah, so money flow is a volume price-based indicator. If you close up on the day, it takes the volume and it adds it. If you close down, it does just the opposite. And I'll say this, where according to money flow, some of the big money came in at, folks, it was right there. Look at that money flow. Right around earnings where it beat those numbers, but we're still waiting on this company, right? Oops, didn't need to go there. Let's just go here. I'm going to go to Market Watch. Oh, sorry, go here. Just the fundamentals and show you information technology, and you can click on that and break it down. All right. Well, folks, we hit some pillars today as we looked at really four key areas where the sector strength and growth could be showing some strength right now, tech-wise, technology-wise, volume-wise, and fundamental, some indications there as well, right? Healthcare, technology, energy, discretionary, financials. That was 5. So those are some that you can watch those individual trends on those stocks as well. Folks, if you got value out of this presentation, do me a favor, just smash that like button. Lets me know that you guys are getting value out of this, and that's the key point that we look at here. Be sure to subscribe to our channel as well. Be sure to follow Brent on X as well, Brent Moore's CS. All right, everybody. Well, we're right there, just ahead of the weekend. Really appreciate the feedback and the discussion in the chat. And Brent, your answers there into the chat as well. Take care, everybody. Have a great weekend. See you next time.